Hello, hello. So today is Friday, June 21st, 2024. It's 9:25 a.m. Israel time, UTC +3. And let's dive right in. So, first of all, I'll start it with the DXY. And I want to make a top-down analysis from the monthly to the minutes. Okay, so I have few approaches. I have one bar approach. Okay, one bar. I have two bars approach, and then 3 bars approach. Now, every one of these is like a complete perspective on the market that you could use on any time frame, but there are preferred time frames to use. So with one bar, we will be mainly focused on this. One bar equal open, high, low, close, and EQ, meaning equilibrium, that's the 50%. So this is one bar analysis. I only care on this bar, like if I'm making analysis, if I'm analyzing this, so I would consider the close, the open, the close, the low, and the high. Now, with that being said, we would look at whether we close through the low or reject the low to assess whether we continue or retrace or reverse. Okay, because the markets are basically only in 3 conditions. They can only be in 3 conditions, essentially. Trending up, trending down. This is 2. And 3 is a consolidation. They are consolidating, they are range bound, and on any time frame, if you look at this, you could see a trend. But if you go down time frame, you will see like on this one, May 2022 was like a bearish trend on the lower time frames, but the higher time frame is a uptrend. Okay, so it's a very simple stuff. Now, if we look on the last 2 months, are we basically took them both, and we basically right now it seems like we are rejecting their lows on the dollar, right? So what does it mean? It means that we are not bearish, okay? And this is only from viewing and observing what is happening right here, this and this. So this is this is going to the two bars approach, because you're already considering like 2 candles. Okay, so right now if we took this, the market is only doing one thing. It's offering, basically not offering, it's pairing liquidity. Okay, it takes liquidity from one side of the market and pairs this with the other side. Okay, it's not the market makers and clearing firms and all other mechanics that we will not discuss right now. Okay, so since we took May and April, our objective on the monthly is to take this 106.166. Basically, if you look closely, although it seems, let me check, this is 169. So basically we have this not taken this high, meaning this is a failure swing. Okay, so it's May high is a failure swing. So we would like to see May high being taken. When? Probably this month. Probably. Let's call it May high failure swing. Okay, time to go down to the weekly. So the weekly, what we can see on the weekly. So the weekly gives us more information. Something very important to know is when you go down a time frame, you simply your main objective is to refine your analysis, and not like if you have a key level from the monthly or the weekly and you go down to the daily, you basically ask yourself, how can I take this level or this level and find any point of interest that is near the key level, like a zone or something, but you don't add more layers because you want always to be to obey to the higher time frame. Okay, so on the weekly we can see a volume imbalance, what we all call VI, and this VI seems to hold in price right now. Yeah, because this week we have traded and rejected it. Okay, you can already see that for this week we have 14 hours to it to be closed. So probably we are rejecting this VI, and if we are rejecting this VI, this objective becomes more and more clearer and more attractive, because the market always has to have an objective, and it doesn't like it. I mean, it can do whatever it wants, but it doesn't go to a certain area or a zone for no reason, because it likes, look at it for like this. It's like a truck that it needs a gas, and if it runs out of gas, so it will not go to a certain area if it will not know that it will have more gas to continue on its journey. Okay, so this is the weekly VI. I don't see any other things to note besides failure swings that we have like this week. Okay, so this is actually not a fader swing. And this took liquidity, so we can't look at this as a liquidity by like algorithmically. Anyway, so this is the PUI on the weekly. Let's see what we can also take from here. Okay, so I don't see anything. Like, you could only take this fractally it took this liquidity, but since this is a week, like, you could also look on every candle as a range. So this is a time range. These candles are very important because they are representing a range, a weekly range, and a weekly range we know is something very important for the institutions and all the big players. So this high, previous weekly high, is liquidity by itself, although it took liquidity. So if I would to analyze this chart without the timing aspect, I wouldn't consider this high. But since this is a weekly, I would mark it, okay? But I will not stress a lot of significance for this high. So this is a 105.406. Okay, we will just PWH, previous weekly high, and bear with me. So this is a previous weekly high. Assuming it should be taken today, since this week that we are trading in started as at June 17th. By the way, we have to remember that we had on Wednesday, so we had on Wednesday a day off. So this week might want to do something, because yesterday we had the unemployment. So I'm assuming this high should be taken today. Now, how it will be taken, let's see. So right now our bias is bullish. Okay, we are bullish for today. Monday, Tuesday, Wednesday, this was a day off. You can see already that it was like inside A, did nothing. Then Thursday, yesterday, started like a bullish delivery, and today we retraced a bit, and I think it should take Friday high, that is actually previous week high. Another thing to note, okay, we could delete this because Friday took this high, okay, and that's the same thing that we already talked on the weekly. Friday took this high, but it took it like with a few points, maybe like not points but pips, but it took it like really in few pips. So we still consider this as equal highs, and equal highs are like liquidity. If it would have, like, this one is like really equal highs that we already mentioned, but this is not equal lows. You can already see that this one is like a lower low. It's really obvious. and equal lows, equal highs are very powerful magnet if we would to summarize it. Okay, so this was the weekly VI. We here can already consider some arrays. This is a weekly OB. Why? Because a VI or any gap is a fair value, and once we trade into a gap or an imbalance, that candle becomes a candidate for an order block, and once we close above that order block, that candle is now an order block validated. So this was the daily bullish OB open. We already see how it supported the move higher on this week, and that's basically it. What I see on the done. What's this? Okay, I don't need this. So although Friday swept daily IRL, it's now considered as equal highs. So I want this to get taken this week, unimplemented today at 3:30 on UTC UTC plus 3, or next week. So that's what I wrote yesterday. And let me delete this and leave this. You can already see how we shifted bullish here on Tuesday, since we closed above this high, and this high basically caused the low. It's a classic shift. It's a classic shift. Okay, so right now we are bullish on the daily, we are bullish on the weekly, we are bullish on the monthly, right? We are bullish on the monthly, because on the monthly we are rejecting lows, and we are closing above highs. Okay, so we are bullish on the weekly, on the daily, on the monthly. We are very bullish. So today should have like clear delivery on the dollar. Let's go down to the 4 hours. 4 hours, the same structure. This is the liquidity that has been taken last week. This is the equal highs, and yesterday I wanted this internal swing to be taken. I noted it as H4 Sorry about it. Now, what did they do? So they basically took this swing high, this swing, and that swing. And right now, I don't think it getting a little bit more, because since they took this high and then they closed below this candle low, basically this candle is a order block candidate. Not order block candidate, but actually OB, because this candle took liquidity, internal liquidity, and we closed below it. So now this candle is order block, but to repel price lower, I don't think that it will have the power to reverse the higher time frames that are supporting continuation. So we might go from here to around here. Okay, you could see this FVG enticing us to go and take some liquidity that residing inside it and then continue. That's something I could consider since we closed above below this low, but I don't know. So the good thing to do is to mark this fair value for buying, and with H4 and let's put an alert here to have an eye on it. Okay, yeah. Now 1 hour. What do we can see on the 1 hour? So I marked this as a lot of SSL resting. On the 1 hour, you can also see, so on the 1 hour, we might have this fair value for buying to support continuation higher. And then we will not take this, but I will be much more comfortable if they will take this, because this one, like, you could already see this consolidation above this fair value for buying is something that the algorithm would really favor. So this is the H1 fair value for buying. We already can see how there is some kind of a retracement here, but also on the 1 hour you can see a CSD here. So right now I'm favoring a down movement on the hourly, meaning I don't think this will hold. I don't think this will hold. Only if we, you know what, today's Friday basically, so because that today's Friday, I don't know how much time they will have for manipulations. So basically, the manipulation could be to take this low, and that's it. So like, go here, take this and this. Yeah, because it's Friday. If it was like on Tuesday, Wednesday, I could see a deeper retracement. I could see some kind of reaccumulation inside the range. But since it's Friday, the weekly objective is very important to get it on the same week. I would consider us repelling from here higher. Okay, that's it for the hourly. Let's proceed to the 15 minutes. Now, on the hourly, basically I look at on another thing that you already saw me take off the indicator, and that's basically the weekly profiles. So what I'm looking here is the range between Monday 4 a.m. to Tuesday. Okay, so that's the UTC minus 5. So Monday 4 a.m. UTC minus 5 is Chicago time zone to the close of Tuesday. Okay, so this range is like the weekly liquidity range, you could call it. It's like the engineering liquidity for the week or for the month. So every week we'll have the high and low of the Monday Tuesday range, and also the high and low of the previous weekly range. Okay, like here. Okay, you could see how Monday and Tuesday range took the Monday Tuesday, like also the low of the previous profile, and then the objective was to take the high of the last profile the last week. So that's something I would look at, and also in the on the equilibriums of last week and last week, like I would look on only 3 weeks. I will not clutter my charts. And if we look from this view, from this perspective, we can see how this week already took the internal week liquidity, and if we continue, we would like to take this high, but since we CSD above the high, we can see some kind of a retracement and some kind of reaccumulation inside the range. That's something that perspective could support not taking this high this week, because this week took its own liquidity. But you know what, actually this perspective gives us more support, more continuation higher, because if we take the internal liquidity of the week, it's not enough for a week that has the unemployment. So this high on the menu for today. Okay, so that was the view from the hourly on the weekly liquidity, weekly profiles. Let's go now to the 15, and on the 15 minutes I basically look on one thing, and it's market structure. I don't look here a lot on arrays, although you could see some arrays that I have marked. Mainly here is market structure. Simply higher highs, lower lows. Are we trending? Are we ranging? And that's it. Shifting or not. So here you could see the shift happened on Wednesday, and since then we are bullish. If we want to see bearishness on this time frame, this low closing below this with displacement is invalidation for bullishness. Why? Because this low is a strong low. What is a strong low? Strong low is a low that took a high, and once we take this low, now you could consider weakening, and you could, and if you want to be more certain, it's closing below this low. So closing below this low is a bearish sign. So right now on the 15 minutes, we don't have any signal for bearishness. So 15 minutes is agreeing with the H4, with daily, with the weekly and the monthly. So M15 is supporting bullishness. Now we, in 5 minutes, London starts, and it will be very, very interesting to see whether this move up is basically just a retracement to go down and to shift. But that's the view on the 15. Okay, 5 minutes. 5 minutes is to another approach. Now on the 5 minutes, we would look for one thing. You could also view the market structure on the 5 minutes because it's fairly visible. Okay, the swings are visible. The swings from the M15 are visible on M5. But if you look on M5, your best perspective is to look on efficiency. And efficiency is the market always should strive for efficiency, to be efficient, to offer price for both parties. And that means that on every price range, we want to have a down close body and an up close body. Okay, on any time range, any not time range but price range, and also time range. Basically, we want to have a down followed by an up candle, like a stroke on the wall with the roller when you paint your house. So that's the same. You wanna see an efficient ranges, and if they are not, it's your doll, it's your draw, it's your magnet. So right now, to understand, like, okay, so you might ask me, okay, so from where? Like, if you would look to the left, you will always find that we traded, like, let's say, you might say, okay, this is inefficient, right? Because we have here an up and down close body, and this is the next down close body, right? So you might say, okay, this is inefficient. This is inefficient. You want a down close body here. But if you would look to the left, you will always find a down close body here. I mean, most of the time, if it's not all time highs. So how you will approach this approach? And the answer for this is we have delivery regions. We have delivery times that are in a way resetting price. And what are these times? So one of these times here is it's 4 a.m. It's 4 a.m. UTC -5. It's 4 a.m. Chicago, and on 4 a.m. it's like a new page in the market. And this approach is basically a TCM approach. And TCM approach, the currency merchant, approach, Keith Robinson, of looking at the market with time and time ranges. So from here, you want to look on efficiency. So Thursday 4 a.m. new page, new delivery. We go down, we go up. Now volume imbalances are not efficiency. So here, what will you want? Okay, if you go here, look closely, down, 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 volume imbalance, volume imbalance. So here, yeah, I will not go really down into this, because it's something that you really need to practice and basically practice with your eyes. But basically, you disregard the wicks. You want only the bodies. Okay, so from here to here, you want an up candle. Once this happened, this is efficient, and this is a new delivery. Okay, up, down. So this is the approach for the efficiency. So yesterday ONS range was efficient, so we don't have any need to rebalance this range. And that's it. London just opened. Let's end the outlook here, and let's see if our anticipations will work out. Thank you very much for following, and thank you very much. Thank you for your time and for your patience. Have a great day and good Shabbos.